Hi, my name is Jalmar Vargas, and we're here at EnerCom Dallas 2019. I'm sitting down with Doug Bailey, CEO of Razor Energy. How are you?
Well, as always, we're very excited about being at EnerCom for our third time in Dallas and probably seventh or eighth in Denver this summer. So we're very excited, as always, to be here.
Yeah, definitely. Can you give us a quick elevator pitch for Razor Energy for those that aren't familiar with your company?
Mm-hmm. Razor Energy is a rather young company. We've been in business for about 2 years now.
Yeah.
We're public on the Toronto Stock Exchange, the Venture Exchange. We went into business with fully intending not to drill wells.
Yeah.
What we wanted to do is take advantage of the abundance in our particular basin. That was legacy oily assets. And again, framing the commodity market back in 2017, it was fairly weak. WTI was in the 40s. So we had a real, negotiating high ground to be able to find these legacy assets and bring them back to life, so to speak. And bringing legacy assets back to life has many different features and activities involved in that. And one of them obviously is increasing production, but also structurally doing business differently. So I think we bring a lot of ingenuity and innovation to these older legacy fields to provide return to shareholders ultimately, but certainly the long-term vision for the company has been established with this. So Razor Energy is built for the long term and built to take on these type of assets and make them more valuable, just generally.
I mean, yeah, it definitely sounds like it. So, Doug, what made the Swan Hills and Kabob regions the right type of assets for Razor's early stage growth?
Yeah, I think those assets had all the attributes we continue to look for in future acquisitions. That being low decline, so our production year-over-year decline was not at 40%, which is typical for a drilling company, more like 10%, a very manageable decline rate year in, year out. But also it had the aspects of light oil. So in Canada, not unlike the US, natural gas does not attract a very good price or a very good metric. Heavy oil in Canada is a highly competitive environment between pipelines and other producers. Heavy oil is probably not the product we wanted to be in either. So it was the light oil focus that we were keying in on. That combined with the low declines. And I think the vendors as well are important, much like buying a used car. You look at the buyer as well. And we were looking for non-core assets in larger company portfolios to be able to take advantage of what we had, and that would be focus. And so the Kabob and Swan Hills assets thus far have certainly exhibited those attributes.
Definitely. Your team has a track record of bringing on new production from legacy assets, which I know you've talked about a little bit, at a very low cost per barrel. What combination of factors allows your team to succeed in that?
It's certainly the team. And the team is not only office staff, but more primarily the field staff. So we adopted proudly about 20 operators in the field. We have wonderful leaders up in the field. They were empowered, I think, by having a smaller corporate vision that we had versus the prior owners of these assets. They bring ingenuity ideas that were percolating over time, but now we're being heard.
Yeah.
So we were able to apply capital, drive those ideas from the field, and really it's that ingenuity and the ownership that the guys have and the gals have in the field, and the office as well. I shouldn't discount the office staff, but including myself. But really it was driven from that motivation and that enthusiasm.
Definitely. What sort of features do you look for in potential future mergers and acquisitions?
More of the same. We really enjoy Swan Hills and Kabob in terms of those attributes that we spoke previously about. But we're looking for more of the same. Again, low decline assets that we can provide yield to shareholders, but also have a very controllable production profile. We don't want to be on the drilling treadmill. We don't want high decline assets that we're expected to drill and maintain that production in a very uncost effective way. So we're looking for the same type of assets. They may not be exactly congruent with where we're at this point in time, so we are looking outside of our immediate areas, but the attributes, again, of light oil, low decline will be highly coveted.
All right. Razor is different from many other companies your size in that you initiated a share buyback and instituted a dividend. What was the rationale for these programs?
Well, I'm an accountant by trade and a finance person generally. So there's a lot of opinions and debates around share buybacks and why they're effective and why you would do them. I believe this is part of the overall return to shareholders. Some would say it's an allocation of capital decision between projects and buying back stock, whichever is the more effective from a financial point of view. Others would say it would be to control or otherwise stabilize the stock. But I truly believe that buying back stock, we can give that return back to shareholders, mathematically and economically. The second aspect of our controllable return to shareholders, beside the buyback, is our dividend. So we instituted a dividend back in October of 2018. The opening yield was about 5%. Right now it's about 5.5%. Okay. So between the share buyback, which is a Toronto Venture Exchange construct called a normal course issuer bid, that allows us to buy 5% of the stock back per year at our choice and our discretion. So between that 5% and call it 5 to 6% dividends, we control within about a $5 million per year context, 11% of return to shareholders before we talk about growth. So this was a very important aspect accompanying the attributes that the assets themselves give us, that low decline, light oil, higher netback situation that really is congruent. Now we're aligned shareholder return, expectations, and doability of that return with what the assets can give us.
Definitely. What does the rest of the year hold for Razor?
We're extremely excited about more ingenuity, more production enhancement, more netback enhancement in the field with our current assets, which is a day in, day out process, obviously. But I think the team is generally looking for more of these type of assets. So we're not shy about saying we're looking for mergers, acquisitions, whether asset, corporate, or otherwise, and grow with that inorganic feel in mind, because I believe, again, after 2 years of really being in the battlefield with these legacy assets and showing real track record of return, I think our team's mentality and certainly skill set is best fit for these type of assets.
Sounds like it. Well, thank you, Doug, for sitting down with me here at EnerCom Dallas.
Thank you.
We're looking forward to seeing you around the rest of the conference.
Great, thank you.